When I look back at my trading life, I see one thing more than anything else. It wasn't the market that tricked me most of the time. It was myself. The market's job is simple. It moves up, it moves down, it rests, and then it does it again. But the mind of the trader, now that's a restless animal. Fear and greed, they run the whole show. You can draw all the lines on your charts, study every price record, watch every tick, yet the instant your own fear takes the wheel, or your greed whispers in your ear, all that careful thinking gets tossed out like it never existed. Tell me, haven't you felt that before? A man sits in front of his tape, sees a stock rise, and he buys a little. It moves up some more, and what does he do? He doubles. The thing climbs further, he's grinning, counting profits he hasn't pocketed. That's greed talking. He forgets the market doesn't owe him a thing. He forgets that every point upward has less value if it isn't planned, and then when it reverses, the same stock that made him proud yesterday makes him afraid today. He holds, hoping it'll come back. He tells himself lies just to soothe his fear. Before long, the profit is gone, the capital is shrinking, and the mind is panicked. I know this story too well because I've lived it. Have you? The public thinks the market is a puzzle of prices, but the real puzzle is the trader's own emotions. Charts are nothing but footprints of mass fear and greed. Every swing on the tape is somebody's imagination taking hold, somebody's pride, somebody's terror. I made and lost fortunes by learning this the hard way. When I was a boy in the bucket shops, I watched men who had the same information I had. They saw the same prices, the same moves. Yet I saw them freeze when they should have acted, or chase when they should have waited. Why? Because their emotions made them blind. Have you noticed how your hand feels heavier on the buy button when you're scared to miss out, and heavier on the sell button when you're scared to lose? Fear and greed, they're both natural, and they're both deadly if you let them steer the trade. You see, fear keeps you from entering a good position when the market shows you the chance. It tells you don't do it. What if you lose? Greed, on the other hand, pushes you to stay in too long. It whispers, just a little more, don't sell yet. Neither of those voices care one bit about your survival. They only care about how you feel right this minute. And trading is no place for feelings. Tell me, do you think the market cares if you're nervous or eager? The only thing that saved me time and again was discipline, the kind you hammer into your bones through mistakes. I remember taking trades where I was sure of myself, then losing heavily. It taught me that being sure is worthless if the market says otherwise. The market never lies, only traders do. They lie to themselves. Fear lies. Greed lies. They both tell you stories to make you comfortable. Not correct. How many times have you held a loser because you didn't want to admit you were wrong? That's fear of being wrong, not strategy. And how many times did you refuse to take a profit because you thought you'd catch a bigger move? That's greed, plain and simple. Let me give you something clear. When I read the tape, I wasn't looking for magic numbers. I was looking for behavior, price behavior. Because behind every price is a crowd of men and women fighting their own fear and greed. That's what moves the market. You'll see a breakout, it climbs a few points, then stalls, fear creeps in for the weak hands, they sell. Then the strong hands who know the trend take their stock from them. The game repeats. You think the chart is lines and bars, but it's really a battlefield of emotions. Don't you think it's easier to fight the battle if you understand the enemy? The worst part is that fear and greed look reasonable in the moment. Fear dresses itself as caution. It says, better wait for more confirmation. Meanwhile, the move is halfway gone. Greed wears the costume of optimism. It says, this trend is strong, why sell now? Meanwhile, the reversal is forming right under your nose. I've seen traders lose, not because they lacked knowledge, but because they lacked self-mastery. Knowledge is easy, you can read a chart, you can calculate points, but controlling fear and greed, that's work, and it's the only work that counts. Ask yourself, do you spend more time studying the market, or studying yourself? You can't kill fear and greed, they're built into human nature. But you can chain them, keep them from running wild. How? With rules. A trader without rules is a gambler, and gamblers always lose in the long run. My rules were simple: cut losses quick, let winners run, never add to a losing position. These weren't theories, they were shields against fear and greed. Because fear will tell you to hold a loser, and greed will tell you to add to it. Rules don't care what you feel. They force you to act in your own interest. Haven't you noticed that the hardest decisions are usually the right ones? I'll tell you something that might sting. Most traders don't fail because of the market, they fail because they can't master themselves. A man who can't control his fear will never buy when he should. A man who can't control his greed will never sell when he must. That's why the market punishes them. The market is like a teacher with a hard hand. It gives you the same lesson until you learn it, and that lesson is discipline. Now, think of your own trading. How many times have you repeated the same mistake, promising yourself you'd never do it again? You see, the mind loves comfort. Fear and greed both offer it in their own way. Fear says, don't risk it, stay safe. Greed says, keep holding, the dream's alive. Both give you comfort now, but pain later. The market rewards the opposite: pain now, comfort later. It hurts to cut a loss, but it saves you capital. It hurts to sell too soon, but it locks in profit. That's the trader's paradox. You must accept pain today for survival tomorrow. Do you see how backwards that feels compared to human instinct? When I sat in my trading room, I would remind myself the big money is made in the sitting, not in the trading. But the sitting I mean is patient, disciplined sitting, not fearful sitting or greedy sitting. Fearful sitting keeps you out when you should be in. Greedy sitting keeps you in when you should be out. The right kind of sitting is simply waiting for the market to prove your point. That's all. But how many traders have the patience to wait without fear or greed gnawing at them? I once held a position in a bull market, and every day my account grew larger. My friends told me to sell, to take the money. Their fear was contagious. They wanted to cash out, and they wanted me to confirm their decision. I didn't. I waited, because the market hadn't given me a reason to sell yet. That patience was worth millions. But I also remember another time in a bear market when I thought I was clever enough to catch the bottom. I bought too soon, and the market went lower. I bought more, greedy to catch the bargain, and I paid dearly for that lesson. So, which voice do you think was louder in my head than fear or greed? The trader's real wealth is not his money, it's his ability to think and act independently of fear and greed. Money comes and goes. I made fortunes and lost them, but the skill to act against my own emotions is what kept me in the game. When you learn to shut out those voices and just obey your rules, that's when you stop being a victim of the market. That's when you become a trader, not just a player. Do you want to be a trader, or just another name in the crowd of losers? Every chart you see, every line you draw, it's just the story of fear and greed repeating over and over. Tops are made when greed peaks, bottoms are made when fear explodes. That's why studying history is so valuable. The same emotions play out in every cycle. The faces change, the stocks change, the decades pass, but the emotions stay the same. Fear and greed never evolve. They are as old as the market itself. So, doesn't it make sense that your best edge is not in predicting the market, but in controlling yourself? When I walk into a trade, I already know two things: how much I'll risk and what price proves me wrong. That's it. If the market moves against me, I get out. No second guessing. Fear wants me to hope, greed wants me to double down, but rules tell me to exit. That's how I keep my capital alive. Because without capital, you're dead in this game. The first rule of trading isn't about making money, it's about not losing it. You can always catch the next move if you still have your stake. Do you think the market cares how brilliant you are if you're broke? I've seen men destroyed not by one bad trade, but by a dozen small ones fueled by fear and greed. They hold losers too long, they sell winners too soon, they chase after every rumor. Slowly, their capital drains. Slowly, their confidence breaks. Then they're finished. And it all comes back to the same two enemies. You can say the market is cruel, but I say it's just honest. It exposes every weakness you have. If fear and greed rule you, the market will find out, and it will take your money. The The strange thing is that fear and greed never shout, they whisper. Fear whispers, just wait a little longer, don't act yet. Greed whispers, don't sell yet, you'll miss the big move. They sound reasonable in your own head. That's why rules are so important. They don't whisper, they command. And commands are what save you. Have you ever noticed that the most dangerous trades are the ones you justify to yourself in whispers? Fear keeps you from entering when the market gives you the best chance. I learned that lesson early, and I paid for it with hesitation. You see, the market often rewards the man who can act when others hesitate. But fear, that quiet voice in the mind, convinces you to wait for more proof, more confirmation, more comfort. By the time you feel comfortable, the best part of the move has already passed. Haven't you felt that before watching a stock climb just as you told yourself to wait one more day? The thing about fear is that it never announces itself as fear. It doesn't tell you, I'm scaring you. It tells you be smart, don't rush, don't be reckless. It dresses itself as wisdom. But it's not wisdom, it's delay. It's the kind of delay that costs you profit. A real trader doesn't need the comfort of certainty. He knows certainty never comes. The moment you need to be sure, the market has already moved. Think about how many opportunities you've missed because you wanted the market to send you a personal invitation. Did it ever send one? I used to sit and watch prices form a perfect setup, everything aligned with my plan. Yet, instead of acting, I'd hesitate. I'd say to myself, I'll wait to see if it holds here. I'll wait to see if the volume increases. I'll wait to see if tomorrow confirms it. All those waits were fear, and every time I waited, the market either took off without me or turned in such a way that made me question my judgment even more. That's how fear traps you. You miss the chance by pretending you're being cautious. Now, don't confuse this with patience. Patience is a deliberate choice to wait for the right setup. Fear is hesitation after the setup is already there. Patience is strength. Fear is weakness. The difference lies in the reason behind your waiting. Are you waiting because the market hasn't given the signal yet, or are you waiting because you don't trust yourself to act? That difference decides whether you make money or watch others make it. Can you tell the difference in your own trading? I remember one particular campaign in a bull market. The tape showed accumulation. The charts lined up. The signs of strength were written in every movement. I had seen this pattern before and knew what it meant. But instead of buying boldly, I hesitated. I told myself, maybe it's too obvious. Maybe I should wait until it clears the last resistance. Maybe I should see another day of confirmation. By the time I finally bought, the stock had already moved halfway. My profit was smaller, my risk was larger, and my timing was weaker, all because fear kept me from acting at the right moment. Tell me, hasn't fear made you late before? Fear works strongest when money is on the line. It whispers, don't risk it, what if you lose? It reminds you of your last bad trade. It shows you visions of losing your capital, of being wrong again, of looking foolish. That's fear's favorite trick, tying your ego to your trade. Because it's not just about losing money, is it? It's about admitting you were wrong, and fear makes that possibility unbearable. So, instead of risking being wrong, you do nothing, and in doing nothing, you guarantee you miss the chance to be right. Does that sound familiar? The greatest opportunities in the market often appear when fear is thick in the air, prices are low, sentiment is dark, everyone is cautious. That's the very moment fear convinces you to stay out. But that's also the exact moment the wise trader steps in. Not recklessly, not blindly, but with discipline. He sees the same fear everyone else sees, but he doesn't bow to it. He acts when others freeze. That's the difference between a player who survives and one who prospers. And tell me honestly, when was the last time you froze at the very bottom, afraid to buy? The reason fear is so dangerous is because it feels safe. A man doesn't feel like he's making a mistake. When he hesitates, he feels like he's protecting himself. He pats himself on the back for being cautious, while the market rewards the man who acted. Fear robs you quietly, not loudly. It steals opportunity, not capital, at least not right away. But opportunity lost is capital denied. Every missed entry is profit you'll never see again. How much has fear cost you in profits you never took? The cure for fear isn't courage, it's preparation. You can't simply tell yourself, don't be afraid. That's worthless. Fear disappears when you have a plan. If you know your entry, your risk, your stop, and your target before the trade, fear has less power. Because then you're not acting blindly, you're acting according to rules. When the setup comes, you execute. The plan replaces the fear. But if you walk into the market without a plan, fear will always win. Would you send a soldier into battle without a weapon? Then why step into the market without rules? When I was young, I traded on instinct. I would see a move, feel the excitement, but then freeze because I didn't trust myself. That's fear again, the fear of being wrong. But over time, I learned that being wrong isn't the enemy, staying wrong is. If you cut your losses quickly, you have nothing to fear from being wrong. The only thing to fear is failing to act when you should. Think about that. Isn't missing the trade often worse than taking a small loss? Fear also shows itself when you size too big. A man risks too much, and suddenly every tick against him feels like disaster. His palms sweat, his mind races, his fear multiplies. He hesitates at the next signal because he remembers the pain of being overexposed. That's why proper position sizing is not just about risk management, it's about emotional management. If your size is too large, fear will always paralyze you. If your size is comfortable, you can act without shaking. Have you ever noticed how much braver you feel when your size is smaller? There is another side to fear, one less obvious but just as destructive. That's the fear of missing out. You watch a stock run, you hesitate at the entry, and suddenly fear shifts from what if I lose to what if I miss it. Now you chase, buying too high, just as the move exhausts. That's still fear, it just changed its mask. 1 minute fear keeps you out, the next minute fear drives you in at the worst price. Either way, fear makes you act against your own interest. Do you see how fear can wear two faces? When I think of all the trades I missed because of fear, I don't remember the exact prices or the exact days. What I remember is the feeling of watching the tape confirm what I already knew, but being too weak to act. The market doesn't forgive weakness. It punishes hesitation just as surely as it punishes recklessness. The man who hesitates misses the reward. The man who leaps without thought loses the capital. The balance is discipline, action guided by rules, not emotions. Do you have rules strong enough to silence your fear? Every great trend in history had to start somewhere. At the beginning of every bull market, there was a day when it wasn't obvious, when the crowd was still afraid. That's when the trader with courage and preparation stepped in. The public only saw the opportunity later, when it was obvious, when fear had already passed. But by then, the best chance was gone. The crowd trades when it feels safe, but safety in the market is an illusion. It always comes too late. Are you waiting for safety, or are you trading when the chance is real? Fear will always be with you. You can't erase it, but you can strip it of its power by deciding in advance. If the chart shows your setup, you act. Not because you feel brave, but because that's your rule. And when the fear whispers, wait, be careful, you remind yourself that your survival is not in waiting, but in acting with discipline. The best chance often looks the scariest, that's why so few take it. And that's why those few reap the reward. Charts are the footprints of fear and greed, nothing more. People like to dress them up, to imagine there's some secret code hidden in the lines and bars. They look for mystical patterns. They give names to shapes. They convince themselves the chart is telling them the future. But what is a chart really? It's just a picture of human emotion played out in prices. Every tick is somebody's decision, and every decision comes from fear or greed. When you stare at a chart, you're not looking at mathematics, you're looking at psychology. Haven't you ever noticed how the same patterns appear over and over? No matter the stock, no matter the decade. It doesn't matter if it's 1907 or 2025, the chart still looks the same because human emotions never change. The market is simply a stage, and traders are actors repeating the same roles century after century. Greed makes them buy too high, fear makes them sell too low. That behavior prints itself on the tape and leaves the footprints we call charts. When I was watching the ticker in the old bucket shops, I didn't need to know why people were buying or selling. The tape told me all I needed to know. The story was written in the price, and the story was always about fear and greed. Can you see how simple it really is? The public loves to think charts are complicated science. They believe if they study enough indicators or draw enough lines, they'll unlock some hidden key. But the truth is far plainer. A rising chart means greed is stronger than fear. A falling chart means fear is stronger than greed. Sideways action means the two are battling it out. That's all. Of course, you can measure the struggle in different ways: volume, momentum, volatility, but at the core, it's always the same fight. Fear and greed, two forces tugging the rope, leaving marks on the ground. Which side do you think usually wins in the short term? The crowd always buys after a rally is obvious. That's greed at work, late greed, the kind that shows up when the chart has already made its run. You'll see the chart spike, candles stretch higher, volume surge. It looks exciting, it looks strong, but really it's just the public rushing in, feeding their greed, buying what should have been bought earlier. And right when greed is loudest, the chart reverses. The footprints change direction, the price collapses, and the same crowd that bought in haste now sells in panic. That panic leaves its own trace, the long red bars, the heavy volume. That's fear's footprint. Haven't you seen those traps laid out right in front of you? The great thing about charts is that they don't lie. A man might tell himself all kinds of stories about a stock. He'll say it's undervalued. He'll say it has growth ahead. He'll say it's a bargain. But the chart tells you the truth. If the price is falling, it means fear is stronger, and all the reasons in the world don't change that. If the price is rising, greed has the upper hand. The chart doesn't care about your opinions. It reflects the sum of everybody's emotions in the market. Isn't it cleaner to trust the footprints than your own wishful thinking? One of the hardest lessons I learned was to stop fighting the chart. I used to argue with it. I'd see a stock falling, but tell myself it couldn't go lower. I'd think the selling was overdone, that the decline was unreasonable. That was me letting my own greed blind me. I wanted the bargain. But the chart kept falling because fear was still in control. When I finally accepted that the chart is always right, I began to trade with the flow instead of against it. That's when the real profits came. Have you ever argued with a chart and lost? Charts are like mirrors. They don't show you the market as you wish it to be, they show you the market as it is. The footprints of fear and greed are right there in the patterns. A breakout tells you greed has kicked down the door. A breakdown tells you fear has flooded the room. Consolidation tells you the two are wrestling in a stalemate. Every movement is a clue, not about numbers, but about human behavior. That's why studying charts is so powerful. It's studying people without ever speaking to them. Doesn't it make sense to learn the language of footprints if you want to follow the crowd's path? Volume is one of the clearest footprints. Rising prices with rising volume, that's greed gaining followers. Falling prices with heavy volume, that's fear spreading fast. Light volume with sideways action, that's indecision, fear and greed both holding back, waiting for something to tip the balance. People think volume is just a statistic, but it's really emotion made visible. The louder the crowd feels, the heavier the volume. The quieter the crowd, the lighter the print. Next time you see volume swell, ask yourself, is it fear screaming or greed shouting? I never trusted tips, I never trusted chatter, but I trusted the tape. Why? Because the tape was nothing but pure footprints. You can't hide fear on the tape. You can't disguise greed. A man can lie with words, but not with his money. When he buys or sells, he leaves his mark, and the chart records it forever. That's why the chart is the truest history of the market, because it's written in dollars, not opinions. Don't you think money speaks louder than talk? The fascinating part is how repetitive these footprints are. A breakout looks the same in sugar in 1919 as it does in tech stocks today. A panic sell-off looks the same in railroads as it does in cryptocurrencies. Why? Because people don't change. The instruments change, the errors change, but human emotion stays constant. That's why I could trade any market once I learned to read charts. I wasn't trading stocks, I was trading people. And people, driven by fear and greed, never evolve. Doesn't that make the game fairer than most realize? Another thing about charts, they expose your own emotions, too. You might look at a chart and feel excitement as it climbs. That's your greed mirroring the crowd's greed. You might look at a falling chart and feel dread. That's your fear echoing the market's fear. If you don't learn to separate your own feelings from the footprints you see, you'll be trapped by them. The best traders read charts, like a doctor reads an X-ray without emotion, just observation. But how often do you catch yourself cheering for a chart to go your way instead of just reading it? The footprints of fear and greed are clearest at turning points. At the top, greed is exhausted, buyers are spent, the chart begins to stall, and then you see the reversal footprints, long upper wicks, failed breakouts, distribution on heavy volume. At the bottom, fear is climaxing, sellers are desperate, prices fall too fast, too far, and then footprints of exhaustion appear, long lower shadows, sudden spikes in volume, sharp rebounds. These footprints are warnings if you have the eye to see them. But if you're blinded by your own fear or greed, you won't. How many tops have you bought because greed convinced you it would go higher? How many bottoms have you avoided because fear told you it would fall forever? Charts aren't magic, but they are honest. They don't predict, they reveal. They reveal what fear and greed have already done, and what they are likely to do next if the behavior continues. The footprints give you probabilities, not certainties. A trader doesn't need certainty, he only needs an edge. And that edge comes from seeing the footprints for what they are, the trail left by human emotion. Follow the trail, and you follow the money. Isn't that the whole point of this game? Rules exist to chain fear and greed. Without rules, emotions win. That's not a theory, that's a fact written in my own account books, written in the fortunes I made and lost. A trader without rules is a gambler, and gamblers are doomed by their own nature. The market is a wild place, a battlefield where every tick is a shot fired. Fear and greed run loose like animals, and if you don't have rules to chain them, they'll tear you apart. Think about your own trading when you acted without a rule. How often did fear or greed sneak in and take control? The trouble is, rules sound boring to most traders. They want excitement, they want action, they want the thrill of the chase. But that thrill is just greed wearing a smile. The fear comes later, when the trade turns and the thrill turns into panic. Rules don't give you the thrill of being reckless, but they give you the profit of being consistent. Which do you think lasts longer? When I was a boy trading in the bucket shops, I didn't have fancy strategies. I had simple rules, hammered into me by losses. One of those rules was to cut my losses quick. I didn't invent that rule, it was forced into me by the market. I'd hold a loser too long, hoping, waiting, wishing, and every time it got worse. Eventually, I learned to cut the moment the market proved me wrong. That single rule saved me more money than any clever scheme I ever devised. Do you see how a rule protects you from your own greed to hold and your own fear of admitting defeat? Another rule I carried all my life was never to average down. The market will tempt you to add to a losing position, whispering that you'll lower your cost and make it back faster. That's greed's trick. But the truth is, you're just digging your hole deeper. A losing stock can go lower and lower still. By adding, you're handing more power to fear, because every tick against you now hurts twice as much. My rule was simple: never average a loss. It kept me alive when others destroyed themselves. Haven't you seen traders go broke because they couldn't resist the temptation? Rules also guard against the opposite side of emotion. Greed doesn't only show up when you're losing, it screams the loudest when you're winning. You catch a trend, your account swells, and greed tells you to take more risk, to add more size, to forget caution. Without rules, you'll press too hard and turn a victory into a disaster. My rule was to add only to winners moving in my favor, never to force a bigger bet than I could afford. That rule chained my greed when the thrill of profit tried to blind me. Haven't you noticed how dangerous you feel after a big win, and how quickly danger turns into disaster? The hardest part of rules is not writing them down, it's obeying them when fear and greed are loud. Anyone can say, "I'll cut my losses when the market is closed." But when the tape is running, and your stock is falling, and fear is screaming, "Hold a little longer, will you obey?" That's where rules matter most. They're not there for the easy times, they're there for the hard times. When emotions are strongest, rules are your last line of defense. Tell me, how many times have you had a rule but broke it in the heat of the moment? I used to keep my rules written where I could see them. Not because I didn't know them, but because I needed the reminder when fear and greed tried to argue with me. The market doesn't punish you for not knowing, it punishes you for not doing. A man can know every good rule and still lose everything if he doesn't obey them. Rules aren't knowledge, they're discipline. And discipline is the only thing that beats emotion. Isn't that the difference between amateurs and professionals? The amateurs know, the professionals obey. Every successful trader has rules, though they might differ in detail. Some use strict stops, some use trailing stops, some only trade certain conditions. The rules don't have to be the same, but they have to exist. When a man sits down in front of the tape, he thinks he's here to outsmart the market. That's his first mistake. The market is never wrong, my friend. The market will do what it does whether you like it or not, whether you hope or fear. And the trader who thinks his feelings can outmuscle the cold facts of price and volume is a doomed man. Tell me, haven't you felt that pull in your chest when a stock moves against you, and you hold on because you don't want to be wrong? Doesn't that sting of pride make you freeze? That's emotion, not discipline, and it will ruin you. I learned early that the only way to survive is to strip out every ounce of emotion and deal only with rules. Rules are the trader's life vest in a sea that wants to swallow him whole. And yet, every new trader, every eager fellow stepping onto the floor, thinks he'll be different. He believes he can ride on hunches, that his gut will guide him. But guts don't pay margin calls. Rules do. Do you know how many fortunes have been wiped away because a man couldn't follow his own system? More than I could count in a lifetime. When I was a boy watching the ticker, I noticed something: stocks didn't move for no reason. They had patterns, they had cycles, they tipped their hand if you paid attention long enough. But here's the secret. Noticing is one thing, acting on it without interference from your heart is another. How many times have you seen a clear signal, a breakout forming, and yet you hesitated because it didn't feel right, and then you cursed yourself later for not taking the trade? That is the battle every trader fights. The pull of feelings against the steel of rules. Let me tell you, rules are boring. They don't thrill you like chasing a tip from a friend or listening to a so-called expert. Rules don't excite. But trading is not about excitement. It's about survival. It's about taking the steady path when every nerve in your body screams to gamble. Don't you see? The whole point is to dull the noise, to let your rules make the decisions you're too weak to make in the heat of battle. Ask yourself, how many times has your emotion told you to double down just to make back what you lost? Did it ever end well? The chart is the trader's compass. Price and volume, those are the only guides you need. Everything else is chatter. A stock rising on strong volume is speaking to you. A stock topping with weak rallies is warning you. But can you hear it through the roar of your own emotions? Most men can't. They trade their hopes, not the chart. They marry a stock as if it were their sweetheart, refusing to see when she's gone sour. I never married a stock. I traded them all the same by the rules, never by the heart. Have you been guilty of falling in love with a trade, holding on as it dragged you into the depths? Discipline is expensive. It costs you the thrill of the gamble, the illusion of certainty, the sweet taste of being right. But in return, it gives you longevity. And what good is one lucky win if the next loss wipes you out? I've seen men turn 10,000 into 100,000 in a season, and then give it all back the next year because they never learned to follow their rules. Do you think they lost their skill? No, they lost their discipline. They let emotions run the game, and the market punished them as it always does. The irony is this: the rules are simple. Cut your losses. Let your winners ride. Never add to a losing position. Trade with the trend, not against it. These are not secrets. They've been written in blood by every trader who came before you. Yet why do men keep breaking them? Because rules demand patience, and emotions crave action, and patience is the hardest thing in this business. Have you ever sat watching a stock drift sideways for weeks, itching to trade just to feel alive? That itch is the enemy. In my own career, I made fortunes and I lost them. But the times I lost, I can trace every downfall back to one thing: ignoring my own rules. It wasn't the market's fault. The market never owed me a cent. It was me. My impatience, my pride, my emotions steering the ship when the rules should have held the wheel. Doesn't it sting to realize that you are always your own worst enemy in trading? Most men come to Wall Street looking for excitement. They don't admit it, but that's what they want. They want to feel alive, to gamble, to taste the rush of winning. But the men who last, the men who build wealth quietly and steadily, they don't look for excitement. They look for rules that work, and they stick to them with iron will. Excitement belongs at the racetrack. On the street, it's poison. Are you here to gamble, or are you here to build? Chart reading is nothing more than a study of crowd psychology written in price. The crowd gets euphoric at tops and terrified at bottoms. That's human nature, and you, if you let yourself, are no different. But the rules save you from being part of that mob. When the crowd is rushing in, your rules tell you whether the trend is worth following. When the crowd is panicking, your rules remind you not to sell into the hole if your signals don't call for it. Without rules, you are just another sheep among the herd. Do you want to be led to slaughter, or do you want to stand apart? The hardest trade is often the right one. To buy when the crowd is afraid. To sell when the crowd is wild with greed. That is impossible if you trade on emotions, because emotions make you a part of the crowd. But rules allow you to step outside, to act when others cannot. Have you ever noticed how lonely it feels to follow your rules when the whole world is doing the opposite? That loneliness is the cost of success in trading. You must remember, no man can command the market. All he can command is himself. And most men can't even do that. They can't command their fear, their greed, their pride. So they flounder. Rules are the leash that keeps your emotions in check. Break that leash, and you are lost. Tell me, how many times have you sworn you'd stick to your stops, only to move them just a little, because you didn't want to take the hit? How did that story end? Every rule you break is a confession that you think you are smarter than the market, and no man is smarter than the market. I don't care if you've had a good run. One day, the market will humble you. That is its nature. The only shield is humility, and humility is expressed through rules. Rules admit that you are fallible, that your judgment can be clouded, that your feelings can betray you. Isn't that true? Haven't your best hunches turned into your worst disasters? I used to write down my rules, over and over, so I wouldn't forget. It wasn't that I didn't know them, it was that I needed to remind myself daily, because temptation is always there. The tape runs, the prices move, and the urge to act on impulse is strong. Writing the rules was my way of keeping them close, of holding myself accountable. Have you written your rules? Or do you keep them vague, easy to bend when the moment comes? Trading is a business of waiting. Waiting for the right setup, the right signal, the right moment. And while you wait, your emotions gnaw at you. They whisper that you're missing out, that you're falling behind, that you must act now. But the rules say wait. The rules say patience pays. And time after time, the rules are right. How many times have you regretted waiting? And how many times have you regretted acting too soon? I never blamed the market for my losses. That's what losers do. They blame the tape, the insiders, the manipulators. But a trader who lives by rules knows the truth. Every loss is a tuition payment to the school of trading. And the only question is, will you learn the lesson? The market is a stern teacher. Break the rules and you pay. Follow the rules, and you get to stay in the game long enough to prosper. Isn't that what you want, to stay in the game? Emotions tempt you to gamble. Rules keep you in business. That is the truth of trading, though most men don't want to hear it. A man doesn't come to the market because he craves rules. He comes because he craves action. He craves the feeling of being alive, of placing a bet, of testing himself against the crowd. But action and gambling are cousins, and emotions are the bridge between them. Once you step onto that bridge, you're no longer trading, you're gambling. And gambling doesn't build fortunes, it destroys them. Haven't you felt it yourself, that heat in your chest when you're about to buy or sell, the thrill of it? That's not trading, that's your blood talking. And blood is a poor substitute for rules. I've seen men with small stakes become kings of the pit, only to lose everything when they mistook gambling for trading. The market doesn't care about your rush of excitement. It doesn't care about your desperate hope. It doesn't care about your sleepless nights. The market doesn't even know your name. It moves by its own forces, indifferent to your feelings. So why do traders insist on dragging their emotions into a business that punishes them? Because it feels good for a moment. Winning on emotion feels sweeter than winning by discipline, but that sweetness is poison, because it teaches you the wrong lesson. Haven't you noticed how the trades you win on impulse always convince you that you're cleverer than you are, while the losses you take on impulse humble you to the bone? Rules have no glamour. They don't excite the nerves. They're dry, mechanical, methodical. They tell you to cut your loss at 2 points, to never add to a loser, to ride the trend until the market tells you otherwise. Rules don't flatter your intelligence. They don't feed your pride. They simply protect you. And isn't that the job of rules, to keep you alive long enough to win when the real opportunity comes? Yet most traders throw them aside at the first whiff of excitement. They say, "This time is different." Have you ever said that to yourself? This time is different. That's the gambler talking, not the trader. I remember sitting with the ticker in my early years, watching prices march up and down the tape. I'd see a stock breaking out, the pattern clear as daylight, but my fingers would itch to jump before the signal was complete. Why wait? Why not get in early and capture more profit? That was emotion tempting me to gamble. Sometimes it worked, most times it didn't. And every time it didn't, I paid for the lesson twice over, once in money and once in bruised confidence. It took me years to learn that the discipline of waiting for the rule to be fulfilled was worth more than any thrill of anticipation. Haven't you felt that same itch to jump ahead, to grab at a trade before your system gave the green light? A gambler hopes, a trader knows. That is the difference rules make. A gambler doubles down because he can't bear to admit he's wrong. He holds on to a sinking stock because he's praying for a rebound. But rules don't pray, they command. They say, "You are wrong, get out." And if you obey them, you live to fight another day. If you disobey, you sink with your pride. Think of the times you've held on to a loser just because you didn't want to be wrong. Did the stock ever care about your pride? Or did it keep sliding until you were forced out at twice the loss? I've seen men lose a fortune in a week because they couldn't bear to take a small loss in a day. They thought holding was courage, but it was nothing but weakness dressed up as hope. Rules demand courage of another kind, the courage to cut, the courage to wait, the courage to act without hesitation when the signal comes. That courage doesn't feel good. It doesn't thrill you. It feels cold, even cruel. But that's the courage that pays. The gambler's courage fades when the market turns against him. The trader's courage, bound to rules, endures. Which kind of courage do you carry into your trades? Every tick on the tape whispers temptation. It tells you maybe you can outguess it. Maybe you can steal a quick profit. The gambler listens to those whispers. The trader shuts them out with rules. Rules are the earplugs that keep you deaf to the market's siren song. Without them, you'll steer your ship into the rocks every time. And yet, most traders rip those earplugs out the first time they taste a little success. They forget that success came from rules in the first place. Tell me, how many times have you sworn to follow your stops only to move them when the market pressed against you, promising that it would turn in your favor? The business of trading is not about being right. It's about being disciplined. You can be wrong half the time and still make money if your rules cut losses and let winners run. But you can be right most of the time and still go broke if your emotions drive you to hold losers and snatch at winners. Rules shift the balance from hope to probability. They turn a business of chaos into a business of order, and without them, you are just another gambler at the wheel, spinning and praying. Do you want to build a career on praying? The gambler feeds on luck, the trader feeds on patterns. The gambler feels alive when he takes a risk. The trader feels alive when his rules keep him safe. That is the difference. And yet, every trader must wrestle with the gambler inside him. That gambler never dies. He waits for weakness, for overconfidence, for impatience. And when you slip, he whispers, "Forget the rules. Just this once." If you listen, you've already lost. Haven't you heard that whisper when you were desperate to make back a loss or eager to ride a hot streak? Capital is a trader's lifeblood. The gambler spills it like water, convinced more will come. The trader guards it with rules as if each dollar were a soldier in battle. Lose too many soldiers, and you can't fight. The gambler goes broke chasing emotions. The trader stays in business because rules keep his losses small and his capital intact. Which side of that line do you want to stand on when the battle rages? Emotions tempt you to gamble because gambling feels easy. You don't need discipline. You don't need patience. You don't need a plan. You just need a feeling and the courage to act on it. But trading is not easy, and that's why rules exist. Rules are the price of survival. They demand effort, consistency, restraint. They demand that you ignore the easy path and walk the narrow one. The gambler runs, the trader walks. Which one reaches the finish line? I've watched men laugh at rules, calling them chains that keep them from acting. But rules aren't chains, they're anchors. They hold you steady when the storm comes. Without them, you're tossed around by every gust of emotion, every wave of price action. You're at the mercy of the sea. Do you want to be a sailor tossed in the waves, or a captain steering his ship with discipline? Every trader has a choice every day, to gamble on emotion or to trade by rules. One leads to ruin, the other to survival. But survival isn't glamorous. It's slow, steady, and often dull. Yet only survival gives you the chance at real profits, the kind that build wealth over time. Emotions may tempt you to gamble, but only rules will keep you in business. Every broken rule is a confession of pride against the market. That is the truth that every trader learns, though most learn it the hard way. When you break a rule, what are you really saying? You are saying, "I know better than the market." You are saying, "This time will be different, because I feel it." You are saying, "My judgment is sharper than the weight of price and volume combined." And that, my friend, is pride speaking. Pride in trading is not harmless. It is a poison that seeps into your system and makes you believe you can bend the market to your will. Have you ever found yourself moving a stop loss because you didn't want to admit defeat, thinking somehow the market would turn in your favor just because you wanted it to? I have broken rules myself. I won't lie to you. And each time I did, I paid for it. Sometimes the payment was small, sometimes it was ruinous, but always it was costly. The market is unforgiving to pride. It doesn't care if you've had a good streak. It doesn't care if you're convinced your reasoning is sound. It doesn't care if you feel this stock owes you a bounce. When you break a rule, the market will remind you in no uncertain terms that it is bigger than you. Isn't it strange how the punishment for pride comes not immediately, but just late enough for you to believe you got away with it? And then it hits harder than you imagined. Rules in trading are written in experience. They are forged out of pain and loss. Cut losses quickly. Never add to a losing position. Trade with the trend. Let winners run. These are not casual sayings. They are the scars of thousands of traders who broke them and paid the price. So when you break a rule, you're not just defying your own system. You're ignoring the lessons of generations. You're saying, "I will succeed where others have failed." That is pure pride, and the market is merciless with such arrogance. Haven't you ever felt the dangerous thrill of thinking you were smarter than all those who came before you? Pride is subtle. It doesn't announce itself. It whispers. It tells you that you're experienced now, that you've earned the right to bend your rules, that you can trust your instincts over the cold logic of the chart. It disguises itself as confidence, And when you're winning, pride grows stronger, feeding off your success. But success in trading is fragile. A few good trades don't make you invincible. Pride blinds you to this truth. It convinces you to break your rules just once, just this time. And then it asks you to do it again. Before you know it, rules have become suggestions, and suggestions have become excuses. Have you noticed how easily one broken rule becomes a habit? Think of the small rule, the stop-loss you move just to give the stock a little room. It seems harmless, even reasonable. But in truth, you're confessing to pride. You're admitting that you can't stand to be wrong, that you'd rather risk more than admit defeat. And what happens? More often than not, the stock continues in the wrong direction, and you lose more than you planned. That small act of pride has now cost you twice over money and discipline. Tell me, how many times have you wished you had simply taken the small loss instead of clinging on with false hope? Or take the rule of never adding to a losing position. Break it once, and you'll find yourself justifying it the next time. You'll call it averaging down, you'll call it conviction, you'll dress it up in fine words. But underneath, it's pride refusing to accept that your first entry was wrong. You'd rather dig the hole deeper than admit you misjudged the trade. And yet the market doesn't reward stubbornness. It punishes it. You can average down until your account is bleeding, and still the stock won't care. Haven't you seen traders go broke, not because they lacked skill, but because they couldn't bow their pride to the reality of price? Pride in trading is the refusal to obey, and every disobedience costs you twice. First, in the trade itself. Second, in the weakening of your discipline. Rules are habits that protect you. Every time you break one, you chip away at that habit. Soon enough, rules feel optional. That is the path to ruin. A trader without rules is not a trader at all. He's a gambler dressed up in charts and numbers. And gambling is the graveyard of prideful men. Do you think the market respects your cleverness, or does it simply strip it away until nothing remains? I've seen fortunes lost, not because a man didn't know the rules, but because he thought himself too clever to obey them. That is pride's true face, the belief that rules are for others, not for you. You think you've graduated beyond them, that your judgment is now so refined you can trust yourself above all else. That is when the market teaches you its harshest lessons. It will humble you, and if you're not careful, it will ruin you. Haven't you noticed that the market has a way of humbling just when you thought you had mastered it? Every broken rule is a confession. It is you admitting that your pride has taken the wheel. It is you declaring that you'd rather be right than be profitable. That's what pride does. It values the ego over the account. It tricks you into fighting the market instead of flowing with it. And in every fight with the market, there is only one loser. Do you want to be the man who proves his point while losing his fortune, or the man who swallows his pride and keeps his capital? Rules exist because traders are human, and humans are weak. We are prey to fear, to greed, to stubbornness, to pride. The rules are stronger than we are. They are designed to save us from ourselves. When you obey them, you admit your weakness, and that humility is your strength. When you break them, you claim strength you do not have, and that arrogance is your downfall. Do you see the trap? Pride makes you believe that breaking rules proves your strength, but in truth it exposes your weakness. Every trader has a moment when pride whispers louder than rules. It may come after a big win when you feel invincible. It may come after a string of losses when you're desperate to claw back. In both cases, pride tells you the same lie. Forget the rules. You know better. If you listen, you've already stepped onto the road of confession, and the market will extract your penance. Isn't it strange how the voice of pride always sounds reasonable in the moment, and only later do you see how foolish it was? The great danger of pride is not just the loss of money, but the loss of discipline. Once pride breaks one rule, it loosens your hold on all of them. Today it's moving a stop. Tomorrow it's chasing a trade. Next week it's ignoring your position sizing. One by one, the rules fall away, until you're left naked before the market, with nothing but your pride to protect you. And pride is a poor shield. Have you ever felt how quickly discipline unravels once you allow one breach? That is why every broken rule must be treated as serious, not because of the dollars lost, but because of the discipline lost. Each broken rule is not just an error, it is a statement, I am greater than the market. That statement is never true, and the market delights in proving it false. It doesn't need to rush. It waits patiently. And when the moment is right, it teaches the prideful trader the lesson he refused to learn. And by then, the cost is far greater than if he had obeyed from the start. Isn't it always the case that the hardest lessons are the ones we thought didn't apply to us? Patience in waiting for signals is harder than pulling the trigger. Any man who has ever stared at the tape, who has ever watched the market drift sideways or swing back and forth without direction, knows this truth in his bones. The market tests your patience long before it tests your courage. Pulling the trigger is a single moment of action, but waiting requires 100 moments of restraint. And that restraint, day after day, is what most men cannot endure. Tell me, haven't you felt that itch when nothing is happening, when the market feels dull, and you think, I must trade something, I must act? That itch is the enemy. The market offers signals, but only when it chooses. You cannot force them. You cannot demand that a stock breaks out just because you're tired of waiting. Yet most traders don't understand this. They confuse activity with progress. They think trading often means trading well, but in truth, the man who trades too often bleeds his capital little by little, death by 1,000 cuts. The man who waits for the right signal, who has the patience to sit idle, is the one who strikes when the iron is hot. Which one do you strike because the chart tells you, or because your nerves can't handle the silence? Patience is the test of discipline. You can have the best system in the world, but if you cannot wait for its signals, it is worthless. A rule that says buy only on breakout means nothing if you jump in 2 points early because you are tired of watching the stock creep along. And isn't that what happens? You get restless, you act too soon, and then when the true breakout arrives, you're already trapped in a bad position, unable to take advantage. Haven't you cursed yourself for being too early? Not because the signal was wrong, but because you couldn't wait for it. I remember years when I spent more time out of the market than in it. The tape would drift without conviction. The setups were weak, the patterns uncertain. My rules told me stay out, and staying out was harder than anything else. Harder than cutting a loss, harder than taking a profit, because the market moves every day, and when you sit idle, you feel like you're missing out. You hear others boast of trades they've taken. You see price moves you could have captured, and the temptation grows unbearable. But those who cannot stay out when the signals are absent, they pay the price. Do you know that sting, watching others trade while you sit and wondering if your patience is foolish? But patience is not foolish. Patience is a weapon. The market is a battlefield, and ammunition is your capital. If you fire at every shadow, you will have nothing left when the enemy truly appears. But if you wait, conserving your strength, you can strike with force at the right moment. Impatience spends ammunition on ghosts. Patience waits for the target to reveal itself. Haven't you wasted trades on setups you knew were weak, only to find yourself undercapitalized when the real opportunity finally came? Most traders think the act of waiting means they are doing nothing. But waiting is doing something, it is obeying. It is holding yourself back when your emotions demand action. It is the invisible labor of discipline, the work no one sees. A trigger pull lasts a second. Waiting for the right signal can last weeks. That is why patience feels harder, because it stretches time and grinds against your nerves. And the longer you wait, the louder your emotions grow. Have you felt that gnawing voice telling you that the perfect setup may never come, that you must take what you can get now? The crowd cannot wait. They rush into every flicker of movement, chasing shadows, mistaking noise for signals. And what happens? They churn, they bleed commissions, they lose heart. They confuse being busy with being profitable. But the professional trader knows the truth profits come from select moments, rare opportunities, where the odds tilt in your favor. You cannot manufacture those moments. You can only wait for them. Are you strong enough to wait while the crowd rushes past you? There were times when my best trades of the year came after months of waiting. I would sit idle, my capital safe, while others grew restless. They laughed, said I had lost my nerve. But when the signal came, when the tape spoke loud and clear, I acted with size and conviction. My patience gave me the strength to strike. That single trade paid for the long silence. Isn't it remarkable how one trade, taken at the right time, can outweigh a dozen hasty trades taken out of impatience? Patience is not passive. It is active control over yourself. It is the constant battle to resist the urge of action for action's sake. Every tick, every bar, every fluctuation is a temptation. They invite you to gamble, to guess, to try your luck, but patience shields you. It says not yet, not until the rules confirm, and when they confirm, you act without hesitation. Without patience, you act all the time. With patience, you act only when it matters. Which one do you think the market rewards? A man who cannot wait for signals is no better than a gambler. He may use charts, he may use numbers, but at heart, he is still throwing dice. He does not wait for the pattern to form. He does not wait for volume to confirm. He does not wait for the market's permission. He simply acts. And the market has no mercy for such men. But the patient trader treats every signal like a key, unlocking the door to a specific opportunity. No key, no entry. Have you ever entered a trade without the key, only to find the door slammed in your face? It's ironic, isn't it? Pulling the trigger feels like the brave part, but the real bravery lies in waiting. Waiting while others move. Waiting while your nerves fray. Waiting when you fear the opportunity may never come. That is the true test, because pulling the trigger is only possible once patience has done its work. Impatience leads to endless trades, with small losses and smaller gains. Patience leads to the rare trade that pays big. The difference is not in the system, it's in the man's ability to wait. Tell me, do you trust yourself to wait when the chart is silent? Some men say patience is boring. They want excitement, action, thrill. But excitement is not trading, it's gambling. Trading is waiting in boredom so that when the moment comes, you act with clarity. If boredom breaks you, the market will break you. But if boredom sharpens your edge, you will endure.